Welcome back. It's a Fixed Income Friday, and we have with us Renaldo who's the head of research at Sterling Investment Bank, taking us through the week's review of fixed income market. What happened? What's likely to happen next week? We have a primary auction of 15-year bond coming up next week Thursday, and it's something to watch. And Sterling is forecasting the yield to range between 12.4 and 12.5%. We continue the discussion, but before that, let's give you an update on the market. Stock market has just closed, and turnover slightly, actually not even slightly, by a large extent lower than yesterday's turnover. We closed at 278 million shillings worth of turnover. Top trader today is Equity Bank, trading just about 3.8 million shares. Safaricom, the second top trader, trading about 1.9 million shares. Of course, third was KCB, trading 1 million shares. Well, so you could say it's a low note close to the week, or typically Fridays you have a rebound of volume because the week typically starts every week. But let's get back to our fixed income discussion. And Ian, just give us the yield curve, the government securities yield curve. And for our viewers wondering, the yield curve is a plot of time. It's a time series plot of the returns of government securities against the 10-year. So typically we look at 1 year, 2 year, up to 30-year SDB. It's called Savings Development Bond. So we plot these and usually we monitor it over time series. Let's look at the yield curve now. And Renaldo, you can see over a year ago, there's a significant drop, and that downward glide in the yield curve, especially in the shorter end of the curve. I mean, is this still liquidity? What's this? What do you do of this? What do you make of this?
It's a combination of high liquidity and also banks' trading strategies or banks' investment strategies. So over the last 1 year, we've seen high liquidity, high market liquidity, but we're also seeing banks changing their strategies. This has been the trend actually since interest rate caps were introduced in 2016. Yeah. So banks have two options. They either invest in government securities or they lend to the private sector. In this case, there's a lot of money flowing, capital flows from towards investing in government securities.
Government securities.
And what has happened is that the central bank is faced with this situation where there's so much money coming in, and they can accept lower bids. Yeah. Low investor bids, and this has pushed the curve lower.
Yeah. But Renaldo, let's talk the corporate debt market. We've not seen any issuance for the last, since when the last issuance was EABL. And the note is coming up for maturity actually in March 2020. We discussed this yesterday, maybe they're here with an EABL analyst. Let's look at the corporate bond market. Do you still, I mean, this is a question we discussed with you before when you're here. How do we bring it up? The corporate debt market, ideally in a situation where banks are not lending, the corporate debt market is supposed to come to the aid of corporates. Yeah, so they can issue debt instruments in the capital markets, but we've not seen that. How do we, have your view changed? How do we get back the corporate debt market?
First, maybe answer why the corporate market hasn't been that vibrant, why there are no issuances. Yeah. The first is look at the most recent issues. That was Chase Bank and Imperial Bank.
This well-known story.
Yes. So this shook investor confidence in corporate bonds. People are asking, or investors are asking, are this really secure? Would I lose my investment if I put money in this? These bonds did not even trade. Okay. The second is, does it make sense to issue a corporate bond in the first place? Because you have to pay a premium for a corporate bond because of the additional risk. So today, if you issue say a 10-year corporate bond, you'll probably need to issue it at above 15%. Yeah. Well, you can access credit at
13%. So the credit market has emasculated the corporate debt market.
But then on the corporate debt, I think we've heard of issuances on the private side, not necessarily the public. There's Mosoni. Is that becoming more of a vibrant market as opposed to people coming into the public space?
Actually, that's become the solution. Private placement of bonds, because in this case, you can target a very specific segment of investors who more or less understand the dynamics of the fixed income market or the corporate bond market.
What names have you seen that are out there and currently looking for money in that space?
Oh, okay. I haven't seen much in this area, but because it's very specific. Okay. The stock of I&M issuing
Interesting.
a bond, but also you need to look at it. Some of the current issuers are also thinking it might be easier to access
The
a corporate
private,
bond, and if I can even retire my existing bond.
Then it makes more
Yeah,
sense.
it makes more sense.
we just talking about examples. I know that Branch, the mobile lender, is issuing a commercial paper, 6 months commercial paper. You can guess where the rate is. I'm hoping 18%. That's what the market is asking for.
Yes, and also
It's a
the
significant
margins.
premium, Renaldo.
Yes, true. And but if you look at the business, Branch's business, they lend at probably
Usury rate.
18% per month.
Yeah.
So they can actually recover that
They
money.
can
It's
easily
not
pass it on.
It's for them, that's actually a cheap cost.
Yeah.
Wow.
And I also see EABL coming to the debt market next year, because we were discussing EABL's balance sheet yesterday here with an EABL analyst, and the balance sheet looks a bit tight. It's a very liquid balance sheet, and they have a maturity coming in next year, in March. And I don't think that they will have to refinance, in my view. They will have to refinance note. Do you think that if EABL came to the market, they will save money?
I think they would.
They would.
And one of the reasons is because they have to issue it at a slight premium. So that rate is attractive to investors. People are looking at, I saw you wrote in the paper, they're searching after alpha.
Yes.
So they're
So
looking.
alpha. It's all about alpha.
Yeah.
Yes.
Yeah. So
And
they're
for
all
viewers,
looking
alpha
for
is the
that.
difference between the performance of the fund, and the difference between the performance of a fund and a benchmark. So if your benchmark is NSE 20 share index, and NSE 20 share index has delivered 10% and you've delivered 40%, then your alpha is 20%. Yeah, just go on. So
Yes. So everyone is in search of that alpha, and the current market environment has limited this the opportunity here is investor opportunities to return high returns above the benchmark.
Yeah.
So any corporate bond that, or let me say any creditable corporate bond will make sense for investors.
Okay. As for all, they're all searching for yield.
Yes.
And Renaldo, the Monetary Policy Committee is meeting on 24th of July. This is something that keeps you awake at night, right? What's your projection? Are they likely to maintain the current stance?
I don't think it keeps me awake at night,
okay.
because
You can't even guess. You even have a view of how the statement is going to look like.
yes, I was about to say that when you look at the statement from the Monetary Policy Committee, the only thing that's edited is probably the numbers. The numbers and the date. Because the figure rarely changes.
Yes.
The statement rarely changes.
Sentiment
and if you, for our viewers wondering what's the Monetary Policy Committee, this is a group of wise men, we can call them wise men, who sit every month. Actually, now they sit every 2 months, and they decide on the minimum cost of money. They actually set the minimum cost of money, actually. Yeah, and they're sitting next week. And obviously, the deliberations is very key to a fixed income market. And obviously, the key thing is the wording of the press release. Are you likely to see any inflation anchorage, or are you likely to see some boring text which you not even look at?
My opinion is that they'll maintain the rate at 9%, same as, say, the last 1 year.
Okay.
And
so nothing changes there?
Nothing changes there. Okay. And also another reason is that these rates, the macroeconomic variables have barely changed over the last few
Speaking of
months.
Of macro variables.
And also the forecasts are
also the same. But what's your outlook on inflation then? Do you have any targets for July?
Our target for July is that inflation will be between 5.8 and 6%.
Okay. And
this driven mainly by the increase in the prices of fuel, the transport costs, and food costs obviously are dependent also on the transport costs.
And so, Renaldo, you're saying that we need to if we must be in the fixed income market, then it's better to look at the longer dated paper. Because, I mean, if your inflation is going to be 6% and you're estimating that the 91-day will come closer to 5% over the next 1 month or so, then it really doesn't make space to
negative,
be... You have negative real returns. So it makes sense to do the longer dated paper if you must.
It does, but also it depends on your outlook. Do you think that interest rates are going to be adjusted upwards?
All right.
Or do you think that nothing is going to be done about this interest rate cuts?
So there are many moving parts.
Yes.
Yeah. Okay. Renaldo, as you wind up, what's your fixed income strategy for next week?
In terms of, because it's a primary, I would bid, say, in the rates we have given between 12.4 and 12.55%.
Okay. That's a bit of an aggressive one.
I don't think it's aggressive,
Okay.
but there's where the yield curve is on the Nairobi Securities Exchange.
Which is 12.3
Yes, but there'll be a slight
premium over
on
the
that.
yield curve.
Yes, over the yield curve.
Okay, so your strategy for next week is for the pension fund managers and all these discretionary funds is go for the primary.
I would go for the primary, but if I was a trader, I would trade in the 5-year or 10-year bonds.
Okay, great. We'll leave it there. That was Renaldo D'Souza, who's the head of research at Sterling Investment Bank, taking us through the week's fixed income market activities. And Renaldo, it was nice having you today. We leave you with the market close figures and have a nice weekend.